Cathie Wood has sent an open letter to the Federal Reserve, and she's explaining why they are making a mistake. So the Federal Reserve at the moment is hiking interest rates pretty rapidly. They're about, I think she said, 13 times higher than they were at the start of the year, which, I mean, she's right about that. They've hiked it only a few times, but I guess one of the things that's kind of become normal is the idea that a rise in interest rates is like a 1% raise now, or a 0.75% raise, whereas previously at the start of the year we were thinking up by 0.25% maybe at most. So we're getting kind of triple and quadruple hikes in one go. Cathie Wood thinks it's a very bad idea because commodity prices are coming down, and they've been coming down for quite some time, at least the ones that aren't fuel or food. And she thinks the economy's in a pretty weak state. She thinks that hiking interest rates here and trying to tackle inflation is going to cause what she calls a deflationary shock. Therefore, the Fed should stop doing it. Over to you for your thoughts on this theory.
Hold on. Wasn't her whole premise on technology that technology outperformance was going to cause or create a deflationary environment, and they would have to combat that anyway? And also, I thought she wanted commodity prices to come down to prove that she was right as well.
I don't know what she thinks about commodity prices, but you're right in thinking that, yes, she has typically thought that, look, the ability to do everything cheaper will push down prices. So if you basically automate everything rather than having to pay a bunch of humans to do it, that will cause deflation by itself. Maybe that's... I didn't quite connect these up in my head, but perhaps the idea then is that we don't need interest rates to bring about deflationary force. There's enough technology. I think that's got to be some years away, though, hasn't it?
Well, the thing is, pairs stock, 90% of the stocks in across all of our portfolio seem to be loss-making stocks. So one of the things that she desperately needs at the moment is a low interest rate, so that these companies, when they do burn through all of their venture capital money, they can get some more at a very cheap rate by just issuing some more shares. The problem at the moment is there's not a lot of VC companies ready to throw any of these companies a lifeline, and them having to take out debt at 6, 7, 8, 9, 10% is that makes them quite a lot less attractive. So you can see there is also a hidden motive behind Cathie's letter to the Fed. It's like, please bail out all of the companies in my fund and by virtue of my fund itself. It does seem very desperate, yes. Basically, it's been mocked quite widely on the internet. I don't know whether you've seen it. There's been a lot of Cathie Wood's face being photoshopped onto the latest Karen of the moment, and saying that Cathie would like to speak to the Fed's manager. They've all been very funny. There was another one that Paul's nicked and posted on his Instagram. It's quite a rude Jerome Powell one. It fits in just well with all his other ones. But that's my general take on it. I think this is a desperate attempt. And it's really fallen on why on earth she thinks the Fed would listen to her on anything is beyond me. Powell's on a path. Jamie Dimon today has come out in support of him. He says he supports whatever he needs to do to sort this problem out. I think Dimon has 100 times more credible than Cathie. I don't really have an awful lot more on that. I don't know if you guys do.
So I had the same thought that you did.
Tables have turned. Sorry, it's just... We were talking about Cathie like she was the second coming of Jesus a year ago, and everything she was saying was gospel. How is it? Well, we know why it's changed because the stocks are doing crap. But it's... Yeah, I never bought the deflationary environment thing because prices go up, and unfortunately, companies do not pass on cost cutting to their customers. Prices just tend to go up and they make more profit for the shareholders. I don't understand why this, as a businesswoman, this message didn't get through to Cathie Wood at all. But sorry, carry on, Steve.
So I had the same thought that both of you had, and I think it's just perfectly accurate thought here, right? That if I was a fund manager who ran a fund that was basically stuffed full of often unprofitable, often debt-funded companies, I would be worried about interest rates going up, and it would behoove me to do anything I could to try and stop that happening. That doesn't mean the things that she's saying aren't true. Of course, that commodity prices are indeed coming down. It may well be that the Fed is going to cause more deflation than it realises. For what it's worth, I never thought Cathie Wood was that great a few years ago, and I don't think she's that bad now. I kind of think we tend to overreact to her quite wildly in both directions. It feels to me like she's pretty clearly talking her own book, but when I see that happening, I sort of think, I mean, sure, whose book is she supposed to be talking? If she started saying, I should buy Coke, Kraft Heinz and Pepsi, I mean, the kind of investors in her fund would all leave, presumably. I mean, what's distinctive about her stuff is it gives you exposure to stuff like Teladoc and Tesla, and if you believe they have bright futures and so on, then you should go buy that thing. But her job is to predict what the Fed's going to do, not try and kind of moralise or offer economic theory to the Fed about what it ought to do. Getting those two confused, I think, is a bit of an issue. I mean, even if you think the Fed is going to do something stupid and you're a portfolio manager, your job is to position yourself for something stupid to happen in that case. And whether you're right or wrong about what ought to be the case and what's best for America, that's not your role as a fund manager, as I see it anyway.
Don't you think that her portfolio has got astronomically worse over the last year? I mean, there was a time when Steve and I used to look at her portfolio and say, hey, look, there's companies like Illumina in there that we might think it's overvalued, but it was starting to turn a profit and it was starting to look like an exciting company, and she can't just ship all those stuff out, and she's gone like right down the rabbit hole and even more kind of speculative tech. So it used to be some speculative tech stuff stuffed with some okay value stuff, stuffed with some expensive but high growth and profitable tech stuff. And it seems to have just kind of, that middle bit, that middle anchors of the portfolio has gone out, and the high growthy tech stuff has been slimmed down, and it's now just filled with crap. And that's the sort of problem I have with Cathie's portfolio, is it's got progressively worse. Even the people who are still into really high growth tech stuff look at her portfolio and say, I don't really like any of the stocks in there. Or you've got Teladoc seems to make its way into like every single portfolio she has. It's just absolutely in the genomics one at some point. There's no genomics at Teladoc at the moment, but it just makes it's a really strange portfolio, and I feel like over time it's got a lot worse, and I think that's why she's getting criticism, is because, yes, the stocks aren't doing very well, but in the process of it, she's panicking and making what was a sound portfolio that was going down into a bad portfolio, which is going down even more.
Well, officially, the line she peddled a lot was, as the portfolio goes down, she would sell off more of the stuff that was holding its value, and put that into higher conviction stuff. But it seems that didn't go to plan, and she just started putting it into any old speculative stuff, and it didn't go, the money didn't go out of Lockheed Martin and into Tesla or Teladoc. It kind of went out and back down into some of the other mRNA stuff that's at the bottom, that's really, really speculative. Like, it's all over the place. And it's not to mention that she's closed 2 of her funds now, hasn't she? One of our favourites was the Israeli one. I think she's closed that one down now. And that
she's handed over control of 2 more to somebody else at ARC as well, isn't she? So she's not actually managing any of them anymore. So, but that what you're saying there is the big problem that I've had with her portfolios for a while, is that you look at them and she changes them quite a lot every day, or the managers change it quite a lot every day, and there's just not the quality in there anymore. I mean, they have that rule that they don't want to hold more than 10% of Tesla. Well, they had a problem that Tesla stayed pretty steady and everything else absolutely bottomed out, and that made them sell Tesla. And then everything fell a lot more and Tesla fell a little bit, and they had to sell some more Tesla as well. And that rule just didn't seem to make sense to me. Tesla was literally the linchpin of their portfolio. It was what they made their name on. And I don't know, for them to just kick that out especially when she's on TV one day telling you that it's got it's going to hit a share price of 1,000 again, and you look at it on the night and she's been forced to sell it because of some bullshit rule that they've invented themselves. It doesn't make any sense to me.
That was one of the things I was going to mention, actually, because there's it's one of the theories out there, and I think you're into that theory as well a little bit, is that if you buy 5 stocks, 5 speculative stocks, and 4 of them could do badly, but 1 of them could do really well. And the idea of that is that you only need 1 to do really well. But Cathie Wood and all of her portfolios right now appear to be the argument against that. I mean, we could say Tesla did really well, but even that's on its way down now.
But the turnover is what's so high. None of these things have been given room to breathe. It's like you buy a stock and it's down 30%, or you buy Coinbase and it absolutely bombs down, and then you see them trimming Coinbase, and you think these things need time to breathe. Exactly, yeah. They're buying the tops and selling the bottoms, and it makes no sense whatsoever. Things need time to breathe. I think they must feel like they need to be seen to be active,
Doing
because,
something.
You know because people are panicking and you know you want to be seen to doing anything. But Lynch has got a quite famous story of him refusing to come home from a golf course when the stocks. He's like, "What do you want me to do? I don't control the market. Is there come back? What do you think I'm going to do?" He did eventually come back, but I think it took him 3 days. I think he was in England actually as well at the time.
Isn't it? That,
Steve, you got anything?
Stories like that are brilliant. I love that story. Just to think that he just went, well, this shit's going to happen, and that's it. And we should be taking that advice and not from the hedge funds.
Couple of quick thoughts then for the moment. I mean, 2 years ago, this was Warren Buffett, who was washed up and Berkshire was finished and Buffett was past it and he can't buy anything and he doesn't understand the world anymore and all this kind of stuff. And now Buffett is God again and Cathie Wood is now Warren Buffett, etc. Cathie Wood's new line on this, for what it appears to me, is to say, look, judge us on our kind of 5-year performance or something like that, right? You can't just talk about what we've done in the last year. Anyone can have a bad year. And she has said repeatedly, in fairness to her, that ARK will underperform in bear markets. We're in a bear market. ARK is underperforming quite spectacularly, but she said that would happen to an extent. The trouble is, the 5-year return on ARK, when I looked earlier today, is a total of 3.44%, which I think is probably less than you would have paid in fees if you would have owned this for the last 5 years. Now, in fairness to her, the world doesn't end now. There's still time for another bull market. She'll go back to outperforming Buffett. She will be the champion of the world again. And we'll all be selling Berkshire Hathaway because the old guy keeps buying Verizon or something. Maybe. I mean, I'm conscious that this isn't the end of the world, basically. The game doesn't kind of stop now forever. But one last thought for you that I've written down on this. She did say in June her fund had bottomed and was now going to make its way up. It was at $40 then. It's now at $35. So it may have bottomed once. That doesn't mean it can't presumably bottom some more times.
Get out of here with your voice of reason. Let's get back to slamming Cathie Wood.